So let's actually just talk about that, because you're talking to investors to invest in a strategy in a region which we're all well aware will have turbulence and will have a dynamic nature which will be pretty regular. And so you've got to be able to tell your story and bring people in to be, and the same thing applies for a lot of these founders. So let me pose the first question to both of you. When you think about fundraising, how have you been able to speak about the markets and the opportunity in a way that the founders also need to have in their pitch, which they're not giving to you right now, what you're hearing from some of the stories? So kind of a two-ended question, but I wanted to make sure I join the dots. Aatif, do you want to go first, and then Shane, you next?
Sure. So first of all, thanks for mentioning that. It's really, really hard to fundraise as a VC, as you know. The no sting a bit more, because it's not an idea being rejected. It's basically you saying, look, I can do this, and somebody saying, no, sorry, I don't agree with you. But that's part of the game. So look, what's worked really well is that, like talking about that long term. And these days, you get a bit more questions about the current macro challenges. And what I tell potential investors and what I tell founders and even prospective employees who are thinking about joining the startups is the same thing. And that is, Pakistan is in the very first innings of startups in VC. So it's one of the few large countries that's still yet to go online, like it's happened in all the other larger countries. And the consequence of that is that it's the opportunity for startups and VC is not as much a function of how the macroeconomy grows. Whether it grows at 6% CAGR or 4 or 3, honestly, it does not matter. You can do the math over a 10-year period. It's not even a 2x delta, right? What it is a function of is the economy going from offline to online. So when you have a close to $400 billion economy, that is maybe now 2 to 3% online. Over a 10-year period, it goes to 15 to 20% online. You do the math on that, right? So that's very simple. You can plug in your assumptions. And then you apply a very conservative enterprise value multiple over that, right? So one thing we've learned through this market is that multiples can get really crazy. So let's stay conservative. So if you take that 15 to 20% of an economy that maybe grows slowly and just becomes $500 billion, you're still looking at $75 to $100 billion in online spending on an annual basis. Now, if you give it, let's say a 1x multiple, because most of it is going to be GMV, even then you are going to be creating $75 to $100 billion in enterprise valuation, right? Let's give it half X multiple. So you can plug in your own assumptions. I literally tell investors this. Plug in your own numbers, and any way you slice it, you're going to get a number that's large enough where it makes sense to be investing in early stage in Pakistan. And I found that this resonates very well. And all of a sudden, like what's happening today, that goes a bit into the background. Now, on the practical side of things, you do have to answer the question of, look, if you are the first believer writing that first $1 million check in a startup, that million is not going to be enough to build to that large enterprise value that these startups really are going for. So where does the follow-on capital come from? And I think like that's a more challenging question today to answer. And in the way I think about it is, if you build a good company, the capital is always gonna flow. A lot of the time, the challenge is, as you're starting, you're figuring out this business model. So you're running a lot of experiments, but if you're past that point and there are good economics in the long run, then that capital is there. You might have to work harder in this environment to go get it. Maybe it will take, 50 conversations instead of 15, but it's there. And that's the risk we are taking. If we're comfortable taking that risk, and that's great founders are also comfortable taking that risk, and they go knowingly into that. So you have an open conversation about that and bring the focus really on the long-term opportunity. And that's worked well for us. And we believe the same approach also works well for founders.